Dear students, welcome to the course of Financial Management. I am your course instructor Shehzad Khan Durrani, lecturer, Institute of Business Studies, Cohort University of Science and Technology, Hangu campus. In today's lecture, we will talk about financial market and financial institutions. This is the part 2 of our lecture. In our previous lecture, we talked about financial market. In today's lecture, we will talk about financial institutions. So let's start. Our outline, it includes financial institutions, right? And then some of the types of the financial institutions, and they are, we will talk about the commercial banks, investment banks, insurance companies, brokerages, and credit unions, and the last one we will talk about the mutual funds. So let's start. Financial institutions. So financial institution, by definition, it is actually an institution or organization that provides financial services for its clients, members, and society. So the financial institutions, or you can also call it the organization, is providing the financial services to its clients, to its customers, to the society, or to its members. Financial institutions are also called financial intermediaries, right? Because it acts as an agent between the financial market and the investors, right? So it acts as a third person, as an agent. So that's why it's called the financial intermediaries as well. Financial institutions accept money from savers, those who have the money, and use those funds to make loans, right? They are providing loans to those who need it, and other financial investment in their own name, right? In their own name, they are doing investment in different securities. Most financial institutions are regulated by the government. They are public, they are regulated by the government. What are some of the functions of the financial institution? So some of the functions performed by financial institutions are financial institutions are responsible for distributing financial resources in a planned way to the potential users, right? So they are accepting deposits. They are accepting the deposit. If you want to deposit the money, so you can deposit it like in banks, for example. Providing agricultural loans, they can provide loans to the agriculture for the development and for the progress of the field of agriculture in a country. Providing commercial loans, so they are also providing loans to different businesses. Providing real estate loans, the real estate agencies, they're different, so they can take loans from the financial institutions. Providing mortgage loans, so they are also providing mortgage loans. Issuing share certificates as well. And the next one is, we will talk about the types of the financial institutions, right? So let's start. The first one, commercial banks. So commercial banks, they accept deposits and provide security and convenience to their customers, right? So they are providing convenient services to the customers, right? And they accept deposits and provide securities, right? If you want to deposit your money, so you can accept it in the banks, right? And they will provide the security to your money. Commercial banks also make loans that individuals and businesses use to buy goods or expand business operations, right? So if you want to expand your business operations, right, so the commercial banks can provide you the loans, or it can provide the loans to the individuals or different businesses. The commercial banks also deals in basic investment products such as saving accounts, in certificates of deposits, right? So for example, you can open two kinds of account in the banks, current account and the saving account, right? So on the saving account you can have an interest, right? So commercial bank also deals with such kind of investment as well. Commercial banks are also called depositor institution, right? So the second name of commercial bank is the depositor institution or the depository institutions. So you can deposit your money in the commercial banks. Another kind is the investment banks. Investment banks help companies, governments, and their agencies to raise money by issuing and selling securities in the primary market. So they are floating the securities in the primary market, right? And through such ways, they are raising the money, they are raising the capital. They assist public and private corporations in raising funds in the capital markets, both equity and debt, right? So they assess both the public and the private corporations by raising funds in the securities, in the long-term securities, including debt and equity. Providing strategic advisory services for mergers, acquisitions, and other types of financial transactions, right? So they also help people like the mergers who want to merge the acquisitions and other type of financial transactions, right? They are providing the strategic advisory services, the investment banks. The next kind, we have the insurance companies, right? So insurance company is one which signs a contract which is presented by a policy, right? So it means that it provides an entity or individual with financial protection or reimbursement against any losses that may occur, right? So if there is any loss, they may reimburse, right? The insurance company is instrumental as a means of protection of financial losses. Main types of the insurance companies, they insure about life loss, right? And they insure about property and casualty companies. So if there is any casualty, they insure about it, right? So they insure against fire, car accident, theft, and other unpleasant events, which is the first type. So that's called the property and casualty companies. The property and casualty companies. And the second one is the life insurance company. So these are the two types of the insurance companies that we have. The next one is the brokerages, right? They act as intermediary between buyers and sellers to facilitate securities transactions. So they are acting as an agent. They are trying to facilitate the buyer and the seller. They are compensated with the help of commission after successful transaction. So if there is a successful transaction between the buyer and the seller, so you have to compensate the broker. A brokerage firm serves a clientele of investors and employs a number of stockbrokers through whom they trade public stocks and other securities, right? They also provide investment advice, portfolio management, and trade execution, right? So they are helping the people through such transactions or through such dealings. Credit unions, another kind of financial institutions. They are not-for-profit financial cooperative associations where large number of people are voluntarily associated for saving and borrowing purposes, right? So there are large number of people, right? They are associated with it. They are established and operated by the members, right? So they are different members. They are actually trying to run the credit union. In a credit union, the member pool their saving, right? So uh, lots of the members, they are trying to collect the money, pool their saving, so that they can provide loan money to each other, right? And then they are helping each other, helping the society, right? Some of the services offered by the credit unions are online banking, right? Saving accounts, checking accounts, credit cards, and certificates of deposit. Another kind of financial institution that we have are the mutual funds. An investment which is comprised of a pool of funds collected from many investors for the purpose of investing securities. So you are collecting money from many investors, those who want to invest, you are collecting the money from them, right? Such as stocks, bonds, money, market securities, and similar assets. You are trying to invest that money in such securities. One of the main advantages of mutual fund is they give small investors access to professionally managed, so it is a professionally managed ways, diversified portfolios of equities, bonds, and other securities. These are the benefits of the mutual funds. So each shareholder therefore participates proportionally in the gain or loss of the fund. These are the references that I use while making my slides. Thank you.